The International Monetary Fund expects India's GDP to contract by 4.5% in the current fiscal, and that is a steep downward revision of 640 basis points from the forecast that it made in April when it had pegged the economy to grow at 1.9%. That's also the sharpest cut for all other major economies. According to the IMF, India's longer than expected lockdown has slowed recovery, resulting in a downward revision. Further, the IMF expects the global economy to contract by 4.9% in 2020. Well, to discuss the projections and the unprecedented challenges that the world is facing, I have with me Gita Gopinath, the Chief Economist of the International Monetary Fund. Gita, appreciate you joining us here on CNBC TV 18. Let me start by asking you about that sharp cut for India, a 640 basis point cut over the projection made in April. And this is still your baseline scenario, Gita. Beyond the lockdown, extended lockdown imposition, what else has contributed to this sharp cut? And what could the worst case scenario be given the circumstances?
Hi, Shereen. So yes, I would say the two of the important factors were, one, that the lockdowns, and these include partial lockdowns, are now in place, have been in place, and are expected to be in place for much longer than we had anticipated in April. So that was one factor. The second factor is that because despite the containment measures in India, you continue to see the cases rise, and so the health crisis is certainly not abated yet. We are now projecting a slower recovery. We expect much more persistent social distancing, and that will have an effect on activities. Combined with the fact that there are some structural vulnerabilities in the financial sector. And so these factors are what have led to the downgrade.
The consensus estimate at this point in time, if you look at what other brokerages, etc., are suggesting, and other rating agencies are also suggesting, is a 5% contraction at the least for India. You're still going with 4.5%, Gita. You also talked about the financial sector's vulnerabilities. What specifically are you most concerned about there? And if this case rise continues at this pace, what do you believe the implications could be as far as the projections are concerned?
So in terms of financial vulnerabilities, I mean, what we all know is that even before this crisis, there were structural vulnerabilities in the financial sector, the banking system, the NBFCs, the HFCs. And if this crisis prolongs, and there is a bigger hit to activity, which can give rise to more non-performing loans, more insolvencies, and that clearly will have an impact. And we know also before this crisis, there was already a high level of risk aversion among the banking sector in terms of lending. And again, all this uncertainty can only hamper that even more. You asked me about what could be a worst case outcome. So we did a simulation of what would happen if there was a second wave around the world. And so for at least on the global level, what that means is that instead of growth being 5.4% at the global level, it would be basically 0%, which is the classic L-shaped non-recovery that we would have from this crisis.
Gita, let me ask you about the impact or what you make of the impact of the measures announced both by the government as well as the central bank. In the last conversation that we had, you said that the central bank has done a good job in the liquidity measures that had been announced. We've seen this package being announced by the Indian government. Do you believe that that is enough to be able to aid the kind of recovery that we hope for?
So there has been many measures taken, both in terms of monetary policy and fiscal policy and financial support. So as an aggregate, the support has been quite substantial. And the recent announcements from the RBI in terms of liquidity support for NBFCs and HFCs, helping with credit, and lending, all of that is absolutely welcome. In terms of the fiscal side, I think what India has done a lot more of is what one calls off-budget spending, which is in the form of loans and credit guarantees, as opposed to on-budget spending, which is in the form of kind of more direct income support. So that is about 1.5% of GDP at this time for India. And I think there is certainly space to do more, especially to help the most vulnerable, poor people and small and medium enterprises.
So if you believe that there is space to do more on the fiscal side, and you believe that the fiscal support, the direct fiscal support, is about 1.5% of GDP, given the debt to GDP ratio, and that, of course, has been a concern for India. We went into the crisis with a very high level. Does that leave room then for additional direct fiscal support, you think?
So if you look, again, just to be clear, the overall support on the fiscal side is about 6.5%. But again, 1.5% is the one that's on budget. In terms of the ability to do more, I think it certainly has. If you just look at the borrowing rates for the government, because of the fact that interest rates have come down around the world, including the RBI cutting rates, the government can borrow at a lower rate now than it could a few months ago. And financial conditions are relatively in a better shape as opposed to the real economy in the world. So yes, this crisis will cause debt to go up. It will cause deficits to go up. We're projecting India's deficit to be around 12%, the consolidated deficit this year. But this is a crisis that requires measures at this point, because if you don't, and you don't get the recovery that you need to bring back bring those debt levels down and to reduce the fiscal deficit, I think you would be in even worse shape. So this would be a crisis that would require a front-loaded response.
Okay, you believe that a front-loaded response is necessary at this point in time. Gita, you've also been talking about the need to build a job-rich recovery, and if that means providing subsidies to firms to hire, so be it. Now, given the fact that in India we haven't seen that kind of direct support, do you believe that there is merit for the government to consider that as we move forward?
When the country is in a stable recovery and people are returning to work, they have an incentive to return to work, and they're less worried about contracting an illness. At that stage, we would have to see a pivoting away from support to keep people at home to encouraging people to return to work, and also in terms of hiring. Now, when you think of hiring subsidies, it's usually not a blanket hiring subsidy, but you want hiring subsidies that encourage hiring of workers who otherwise have the risk of becoming long-term unemployed. And that kind of targeted hiring subsidy would absolutely help.
Gita, one of the other factors that we now need to contend with when we talk about the India story and the path to recovery is the standoff with China and what that would mean in terms of import restrictions, retaliatory measures, etc. And all of this is still a matter under discussion. But do you believe that India should, at this point in time, consider higher import restrictions, bans on imports from China, and what could that mean for the Indian economy given the trade deficit?
So Shereen, I mean, many countries in the world are reassessing the benefits of globalization, but I think we should just keep one thing very clear, which is, and this is true for India too, which is that if you want to have a job-rich recovery, I mean, and India wants to be a big player on the export markets. It wants a big manufacturing push, a Make in India push. In that case, being a part of global supply chains is very important, because you get your intermediate inputs from the rest of the world to be able to do that. And so therefore, policies that encourage more integration with the world as opposed to backing off is just more, it would be a best practice more generally for everywhere. And there are countries in this crisis that were putting restrictions on medical exports, and we called on that for that stopping. That hasn't completely stopped, but we certainly want more of those restrictions to be lifted. And so again, if you have to step back and think of from a kind of a more holistic development strategy, which is one where you want to have a bigger manufacturing sector, where you want to have more jobs, integration has in general helped. Now, of course, there will be some communities that will get affected from it, and that's where domestic policies have to play a very important role.
This could perhaps be a significant factor, Gita, and how this plays itself out as far as the downside risks are concerned to the projections that you've made for India, I would imagine.
I mean, at this point, in the baseline, of course, we're not going to assume that there's going to be a a serious disruption on the trade front, because that would be speculative at this point in time. But if you were thinking of downside risks, yes, I think this would be. But again, this is not just for India, but there are other countries in the world too for which this could be this is a major downside risk.
Yes, it could be, but we'll have to see how this plays itself out in India specifically. I want to talk a little bit about what's happening in the rest of the world, Gita. And one of the things that you point out that's different this time around is the fact that traditionally we've seen the manufacturing sector being far worse impacted, but this time it's the services sector that's been hit harder in comparison. So hospitality, tourism, some of those sectors have seen demand evaporation like never before. What could be the implications of this, especially for emerging markets like India?
So indeed, if you services of the kind that you mentioned, which is what we call contact-intensive sectors, leisure, hospitality, tourism, recreation, all of those
theaters,
big events, all of that has a big impact on. Those are sectors where we're seeing the recovery to be much slower. What that actually means is that those sectors also tend to be quite labor intensive, which is why at this time around, if you look at which sectors have been most hit, most workers have been most hit, they tend to be low-income workers and semi-skilled workers. And then when you think ahead in terms of the recovery, it is exactly these workers who have a harder time coming back into a full employment. So that's one of the reasons why our projections for the recovery for the global economy is a slow one, even into next year.
And will that then mean, Gita, that things are going to get far worse when we talk about, the widening of inequities? Is it going to get far worse at the bottom end of the pyramid?
Indeed, I think that is an absolute risk, because this crisis hits low-income workers, unskilled workers, and women among them much more severely. The risk of an increase in inequality, the increase in absolute poverty. I mean, this is a serious. The World Bank came up with recent projections about what the implications are for increase in poverty, and the numbers don't look great even for India. So this is a major concern. Now, in the developed world, there is enough income transfers that are happening that you can actually see consumption still holding up. But the question is also, for how long can this be sustained, especially if this pandemic continues much longer, and some of these sectors will just have to structurally shrink in size.
Yeah, yes, that is going to be a problem. But, Gita, one of the issues that we spoke of when we last had our conversation was on this sort of divergence that we're seeing between what the financial markets seem to be doing and what the real economy seems to look like. And that divergence continues. Now, I know that a lot of this is liquidity driven. We've seen central banks being very, very aggressive. Do you believe that is likely to continue? And do you believe that this divergence is likely to continue as well?
I believe your first point which is the fact that central banks will remain highly accommodative and interest rates will stay long for a long time, is something that will indeed be the case. The question is what in addition is causing this disconnect. I would add two more to it. One, which is that there is tremendous uncertainty on the way forward. You could have an upside risk, which is you could have better news on the medical front, vaccines and treatments, and that could cause recovery to happen much faster. And I think the markets are focusing on a good scenario in terms of their sentiment. And then lastly, of course, the markets don't capture the economy as a whole. The ones who are being hit most are small and medium enterprises, and they're not listed on the stock market. And so that also generates a bit of a disconnect. But I think what this disconnect means is that greater volatility in financial markets. Every time there's going to be new news on the treatment front or on case front, you are going to see a big big movements.
Sharper corrections, you think?
Again, you saw what happened yesterday in terms of the U.S. stock market. There can be important swings. We just put out today the Global Financial Stability Report, in which we flagged, concerns about excessive risk taking and the financial vulnerabilities this disconnect poses.
but things are very different in comparison to 2008 when we talk about financial stability. So is that a big risk factor today?
Yeah, in terms of, I think what is certainly true is compared to the global financial crisis, the banking sectors are much better capitalized, and that they certainly have more buffers to deal with this crisis. But this is a severe crisis. I mean, the real outcomes are, again, off the charts. And so, this, I think, is an important consideration. Secondly, corporate debt levels and non-banking financial corporations have played a much bigger role in recent years. And they are far more susceptible to big changes. And I should also flag that, policies in the major central banks of the world have helped more generally across the globe. Because if you look at emerging market capital flows that were reversing very sharply in the beginning of this year, especially in March, those have stabilized. Credit spreads in these economies have stabilized. So this has helped more generally. Any tightening in conditions can obviously generate a lot of distress. And debt is now being projected at the highest level ever. I mean, higher than the World War II peak.
Yes, debt levels at historic highs. But Gita, I want to pick up on the aspect that you spoke of, that the stock market doesn't fully factor in what's happening with the small and medium enterprises because many are not listed. And in the context of what we're seeing happen here in India and other emerging markets, of course, the large informal sector as well, especially when we talk about the recovery, in terms of policy response, what do you believe will need to be the future course of action to address this?
So yes, it's a particular challenge in countries where most of the employment is in the informal sector. I think that is, poses additional challenge, firstly, in getting income in this time into the hands of informal workers. And here we think that countries that can use digital payment methods and expanding that would help. And secondly, also in-kind transfers to informal sector workers, and this can go through, especially if you have a good, good system of local authorities, local communities. Those are channels through which you can also help in-kind support. But again, going forward, there will be more generally the need to do more on more structurally, which is, for instance, the case of India, doing more in terms of labor reforms, which is improving working conditions of labor, also more formalization of the labor force. I mean, all of that will probably need to be accelerated, to get the growth back and productivity back for the economy.
You spoke of labor reforms, Gita, and I don't know if you've had a look at what some states in India have announced, and there has been a sort of retraction to some extent of what was announced by states like UP, etc., which was a complete suspension of all labor laws. Do you believe that that is the way forward if India really wants to move ahead and present a reformist case on the labor front?
I mean, the reforms on the labor front have to happen on many dimensions. One, of course, is more flexibility in terms of hiring, better working conditions for laborers, more formalization of the workforce. So all of this has to happen together. And again, especially if India wants to become a major manufacturing hub and provide employment for a very large number of the size of the workforce that exists, I mean, these reforms will be essential.
I'll go back to the previous question that I asked you, and you spoke of this retreat from globalization, the momentum once again building on that, and ask you this in the context of what we're seeing the Prime Minister announce with Atmanirbhar Bharat, of the self-reliant India. What would you like to see by way of details there, or what are your concerns with respect to this? Do you believe that that this is a consistent message that India is sending out, saying that we want to emerge as an exporter to the world, at the same time attract foreign direct investment and be self-reliant?
So the point you made is absolutely right, which is that the details matter, and of course we have to see those. But again, like in other countries, there are questions arising about the gains from openness. I think whatever policy you make on one front has to be seen from, it has to be a consolidated picture, which is that what is the ultimate goal? The ultimate goal is to have a stronger manufacturing sector, is to have more jobs available, if the plan should be a bigger part of the global supply chains, then all of those call for greater trade integration and not exactly pulling back. But of course, individual countries will have to make decisions about how to help their own people. And in this regard, I think it's more than international policies. It is about what you can do on the domestic front in terms of domestic policies to ensure that those who are being negatively impacted receive support through wider social safety nets, through better training, through better kind of schemes where you do kind of training in-house in terms of in firms itself. So measures of those kind.
Gita Gopinath, always a pleasure. Appreciate you joining us here on the Global Dialogue with your take on the forecast presented by the International Monetary Fund, a 640 basis point cut for India over the forecast made in April. Always a pleasure. Thanks very much for your time. We'll take a break, but there's a lot more coming up. Don't go anywhere. We're back in a moment.